I'm Alan Canny, Managing Editor with REIT.com, and joining me is my colleague Brad Case, NAREIT's Senior Vice President of Research and Industry Information, to talk with us about what happened in the REIT market in April. Brad, there's been a lot of concern out there about the economic news. How'd that play out with REITs last month?
Well, it played out fine in the REIT market. You know, it's true, investors were concerned. It's not that the economic news was bad, it just wasn't quite as strong as they'd expected. And so the stock market did take a hit during April. Large cap stocks lost more than 0.6%, and small cap stocks lost more than 1.5% on the month. REIT stocks, though, returned more than 2.8% on the month. So it was a very strong month for the real estate market for investors investing through REITs. And that's actually something that we're getting used to. If you look on a year-to-date basis, REITs have quite strongly outperformed the stock market during 2012. That's true over almost any historical period as well. 10 years, 20 years, 30 years, 40 years. REIT returns over any of those relatively long historical periods have averaged at least 10% per year and have outperformed the stock market over all of those periods.
Well, it sounds like it was a good month for the REIT market as a whole. How about sector to sector?
Well, you know, nearly every sector of the REIT market gained during April. Some of the strongest performances were actually one of the newest sector in the REIT market is the infrastructure sector. There is a way for investors to make investments in infrastructure through publicly traded REITs. And the infrastructure sector, although it's very small at the moment, gained more than 9% during April, so a very strong one. Another particularly strong sector during April was regional malls. Although there was concern about the overall economic recovery, there wasn't really concern about about consumers spending. And so regional mall REITs returned very strongly during April. I think really what we're seeing is that there's so much pent-up demand among consumers for things that they would like to buy that retail REITs are seeing the benefit of that.
Another area where there seems to have been some concerning news for years now is the home market.
Oh, yeah.
What about the residential mortgage sector?
Actually, mortgage REITs as a whole outperformed equity REITs. So companies that owned mortgages and are invested in mortgages outperformed companies that own buildings. Mortgage REITs gained 3.5% on the month. And the strongest performer there was home mortgage REITs that invest in mortgages for individuals to buy houses. And in fact, even though the sector outperformed, they're still offering a dividend yield of close to 14% per year. So really a very strong combination of total return during the month of April and a continuing high dividend yield.
Okay, well thank you for your insight, Brad. And for more on this and other REIT news and analysis, check out REIT.com.